Hi, I am Anna. I come from www.ntvforex.com. US Banking Outlook 3Q20 Interesting Times Analysis http ntvforex.com News ID 390925 8/11/2026 22:56 p.m. The speed and magnitude of the economic collapse that followed the COVID-19 pandemic resulted in the sharpest contraction since World War II and pushed policymakers, financial institutions, businesses, and households to take unprecedented actions. On the policy front, the Federal Reserve Fed responded with a battery of interventions totaling $5.7 tn in firepower. Since March, the Fed has disbursed $2.5 tn, equivalent to 12% of GDP, mainly through the purchase of $1.8 tn in Treasury securities and $0.6 tn in mortgage-backed securities. Congress also passed 8 pieces of legislation providing massive fiscal support, primarily through the Coronavirus Aid, Relief, and Economic Security CARES Act and the Paycheck Protection Program and Healthcare Enhancement Act PPPHCE, which together authorize roughly $3.5 tn, equivalent to 16% of GDP. 1 The CARES Act allowed the Fed to work hand-in-hand with the Treasury Department to put in place facilities that provide targeted liquidity not only to the banking sector but also to the non-bank financial sector and non-financial businesses. The size of the monetary and fiscal stimulus has helped to soften the blow from the collapse of economic activity during the first half of the year through a decline in financial stress, credit and lending facilities, tax relief, welfare support and aid to industries, states, and local governments, albeit amid elevated uncertainty. Despite this, many industries such as hospitality, air travel, restaurants, oil and gas, and brick-and-mortar retail, remain disproportionately affected by the downturn. Business bankruptcies are on the rise across the board, and the longer the current conditions last, the larger the number of establishments that are going to have to shut down permanently. Throughout the crisis, commercial banks responded vigorously to address the challenges, even with the majority of bank employees working remotely. Initially, banks met successfully the spike in credit demand from businesses in the second half of March, as companies rushed to draw on their lines of credit to boost liquidity. Since April, banks successfully supported the government in underwriting $517 billion in LOANS2 NBSP through the Paycheck Protection Program PPP. This amount represents over 20% of total CMPI loans that banks held on their balance sheets at the end of last year and provided emergency liquidity to many small and mid-size businesses. Throughout this period, banks have coped with the inevitable credit risk increase that occurs during economic downturns, which has already resulted in large loan loss provisions. Nonetheless, despite the decline in profits in the first half of the year, commercial bank employment has remained relatively steady. Figure 1, branch openings continued and net closings were lower than in the same period last year. Figure 2. Moreover, banks successfully managed the massive migration toward digital and mobile banking. According to Fidelity National Information Services, there was a 200% increase in new mobile banking registrations and 85% more mobile banking traffic in early April. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.